What's up, everybody? I just wanted to go over some of the trades of today. One account, you can see I'm up $7,300 on. The other account, I'm up $3,800 on. And I actually even have some more accounts. I traded some of my larger accounts earlier this morning in conjunction with the account that made $7,000. I had some accounts that made a little bit more. But overall, these are the accounts that I kind of wanted to go over the trades that I have made. We're going to go ahead and jump kind of right into the charts here. So these two accounts were both traded on NASDAQ today. NASDAQ is my bread and butter. It's what I know the most. It's what I make most of my money with. And so we're going to basically go into the weekly. First, we'll look at the weekly, right? So the weekly one, we kind of literally hit this critical level. It looks like we're way overextended, kind of out of the bands. And I called this top in the QuantView Discord channel within 15 points. And so within 15 points, I called this top, and pretty much we have been going down ever since. And I still think that we're going to basically pull it down to this middle band. But then there's another thing that I look at in the weekly is what I think is going to be the total range of a candle. And this yellow line is what I thought the bottom of the range would be. So once we kind of come down to this level, right now I'm potentially looking for longs because we are, we've exhausted the weekly level and we could potentially continue going up. And so once we, this morning around 8:30, once we started to push up with a large candle size, right? This is kind of the entry that I was able to capitalize on. And I'll go over the logic in it. Basically, this support level, once I see that we close above the support level here, right now, this is extremely bullish. So my logic is that I can basically take long here and have my stop right below this level right here and kind of ride that up and see if it plays out in my favor. And again, this also has to do with what I saw in the order book, what I saw over here on the Q wave. You can see that we had top band, lower band, top band, lower band, lower band, lower band, lower band, right? And then we push up, right? And this is that this candle right here. We push back down, right? But we're making a lower high. We push up, we bounce on the midline. This was the entry, and so that was that was kind of the entry point broken down into Rinkos. And then the other thing is that if you look at ES here, I don't think you all can see the ES chart. Let me bring the ES chart down just a little bit here. Yeah, let me just bring the ES chart down. So you can see we're on the lower bands on ES at 8:30. And you can see that we started to push higher. Now, this is kind of whenever you see ES in the lower bands going into open and you are overall have a bullish bias, there's a good chance that we're going to at least pull back to the mid bands or potentially pull back all the way up to the top band, which is exactly what we did on ES. It was kind of like a beautiful setup on ES today. So was able to capture in 4 contracts and long there, was able to ride that up to this level here. And this is market open, and I put my stop right below this yellow line here and did get stopped out of this trade. In hindsight, this wick down was a beautiful entry for a long right at open. But again, I was a little hesitant. I was afraid that maybe we might push back into this level right here. So it was a little hesitant, but it was a perfect wick, I think off the 50 moving average or the 21, I don't remember. But it was pretty much a perfect kind of setup. And the thing is, in my head, if we close above this yellow line, then we'll probably continue being bullish. And because this was that overnight resistance level, the right before we saw the big tank. And then definitely once we closed over this overnight kind of resistance level as well here, this is kind of becomes extremely bullish. So once we close above that was extremely bullish as well. And you can see that we continue getting pushed up. Now I was able to take another long on that account as well for like another $1,000. That's how I ended up with the 7,000. And I took some small losing trades as well in this zone. But overall, it was just winning trade after winning trade. Now the $3,000 account, the one that you see up on the screen right now, all those trades were taken within this zone. So this chop zone. Now, a couple thoughts going into this zone. I thought that we would come up, touch this zone, and basically just rip down, right? At least rip down to this level right here, which is exactly what we did. We just did it a lot later than I thought we would. You might be wondering why this level right here. It's because it's the top of these wicks here, right? So this is all this space right here is kind of what I call think about it as easy rip territory, right? There wasn't it's easy rip territory. So if we come down to this level, there's a good chance that we'll just rip through it, which is exactly what we did. We also had this order block. We were stalled out on ES for the longest time, like at the top of the bands. And so I just kind of kept on trying to short it. And then I kind of got fed up with it. But we'll look at it really quick. So all the trades were taking in this zone here, right? And so basically all I was doing midline bounces. So taking longs off this midline here, right? And then kept on trying to short the top. Sometimes when I was trying to short the top, like right here, I would take a little bit of a loss. The other thing my other big losses, here, like the $700 loss or $400 loss, and some of these losses right here, those a lot of times ended up playing in my favor. So those sometimes were the midline bounces. I thought we were going to get a midline bounce, then we continue just pushing down a little bit more. It was heavy, man. I was like in it for 10 contracts, and so sometimes 5 to 10 contracts sometimes. And, so I would close the position and then just to have it come back and push in my favor. I was able to hop back in and kind of make back what I lost. But because I had such a bias going down, I was really had a hard time holding midline bounces. And you shouldn't, to be honest with you. Like I did exactly what I should have done. I should have probably waited a little bit more confirmation on the midline bounces, and maybe looked more at the levels and the candlestick patterns that we were forming, and the moving averages that we could potentially bounce off of. But overall, I was happy with my entries. I don't think I would have done anything differently. Maybe again, just been a little bit more patient on taking the midline bounces. But overall, again, I'm okay with killing my trades if it's going against me, because if, for example, I decided not to kill this trade, it could have just ended up like this, right? And it could have, and these drops, when you have drops like that, a lot of times those can happen really quickly. I mean, so you can, lose $1,000 in no time. And so, ideally, I wasn't trying to make money from scalping this zone. That was kind of just a byproduct of me trying to make sure that I was in on this move here. So once we had this move at the end, and it's just started to go in my favor just a little bit. And once I saw that I was over $3,000 on the day, I went ahead and just killed the trade. Hindsight, third time's a charm, and I would have, I mean, that right there is probably a 5 for 10 contracts. Right now that would have been probably a $10,000 trade there. So kind of the bummer. It's okay though. Not going to FOMO in. It's okay. Kind of sucks in hindsight, but that's trading. It happens. It's okay. I'm still up crazy money on the day. On all my accounts. I don't have one account that I'm under on. So overall, it's a pretty good trading day. And right now, if I was to be looking for a trade, I'd probably be looking for a bounce here. I think we're under the 200 now. Let's see where we are. I think we're under the 200. So we ripped through the 200, which is the white line here. I would potentially be looking for a long right now, actually. We are literally coming back down to this resistance level that I have marked out. This also lines up with a fib level as well that we seem to be kind of bouncing off of right now. So I'd be looking to see if there is a setup for a long. Honestly, if we kind of push down to this level here, I'd be looking for a long entry. This is kind of like one of those setups where it's like you could take a long, if you got a good entry right at 52, you could take a long entry and then you would have your stop at, you could have your stop literally right under these. So at 31, so that would be a relatively tight stop. And then what you'd be looking for would be a pullback to the 21 EMA here for a quick scalp. Overall though, you know, and then the problem is now, so below the 200, if it pulls up to the 21, doesn't mean that we're going to have a big move to the upside. If anything, we might hit the 21 and just come back down. Let's see what this zone here is. This is 99, 699. That's not right. So this zone is right here. Yeah. So also, yeah. So the other thing is potentially we could come back up to that fib level, but because that's kind of an order block zone now, we could come back down. Actually, I'm kind of curious to see how this plays out here, because I did just say we could look for a long off this fib, off this resistance level, and a pull to the 21, and probably a rejection right back down. This is what I think. We'll see what happens here. All right, there's the 21, and you got a rip right off the 21 there. A little bit of a pullback. That, see, the first touch of the 21, a lot of times you'll get like a little micro pullback, right? Even if it continues through it. So that is always a kind of a nice trade to see if you can capitalize on. Sometimes it doesn't always work. Let's see if we push through the 21 there. The 21 is this line here. All right, so exactly what I said. Literally long up to the 21 moving average, which is this line right here, and a rejection off of it. And looks like we are continuing to reject off of it. Literally exactly what I said. Now, I wouldn't be trading the rejection of this. Personally, I would have traded the bounce to the 21. Just because this is kind of what I'm comfortable with. It's what I know. Once you see a fib level also lining up with a known resistance level, we're near the bottom of the bands here. Not quite forming a double bottom, but we're kind of on the bottom part of the bands, right? It was a beautiful little bounce. Now, we could continue pushing higher. We could push above the 21 here. This is kind of when we're between the 9 moving average, which is this blue line, and between that 21, that's kind of like, it could go either way. And I would need it to close below the 21 it needs to close below the 9 to, start coming back down, or it needs to push and close above the 21. So this is kind of like chop zone. But again, I wouldn't be trading the 21 bounce. I would be trading from the pivot, or, when you have a pivot and a support and a fib, you have multiple confluences saying that this is a level and you're looking for a micro pullback on a down movement or an up movement, right? A lot of times that movement will trade to the 21. And just something that you see over and over and over again. Anyways, that's it for this video. Make sure you guys like, subscribe to the channel if you guys haven't already. And I'll try to put out some more videos and more content as I go into the rest of this year. See ya.